of course, the most important of today, my guests. I have Jose Ivan Garcia, the chairman of SubgenAI, with us. Very good to see you, Ivan. How are you doing?
Fantastic, Antonio. Very happy to be here.
And thank you for that. And our special guest of today is Gianluca Minella. Very good friend of mine. Really appreciate it. You take time to exchange your very important knowledge with us. Gianluca is the head of infrastructure, research in infrastructure at the Infrared Capital Partners, long expertise, and our client knows very well him because it's thankfully for a few years that he joined us all the time for our 20 minutes coffee every quarter. I still have my coffee, my espresso here with me. Today is from Dubai, actually. Thank you for taking the time to join us, Gianluca. Very good to see you.
Thank you, Antonio, and hi, Jose.
So with the focus of today, with this market intelligence chat that we have, this is the second one actually that we have with the SubgenAI, with Ivan, specifically talking on digital infrastructure. The reason behind that, of course, because SubgenAI is a player from the industry that is very much growing their activities on the full value chain linked to digital infrastructure and innovation AI, because of the parent company, actually the group holding, not Substrate AI. Gianluca, so we're gonna. I would like to kick off for our chat today, and specifically talking with Gianluca. When we talk about digital infrastructure, we put this one in the basket of real assets, right? And then I would like to hear your opinion, because in many cases we are talking about infrastructure, other cases we are talking about real estate, right? So you are the right person to enlighten us about the right way to approach it. But most of it, the question is related, considering the actual macro environment that we are experiencing, pretty tricky, challenging, I would say, where actually real asset and digital infrastructure specifically can play a role, an important role into the portfolios.
Absolutely, Antonio. You hit, I think, the key point. Historically, real assets have been a diversifier, and they grew massively in a long period in which interest rates were very low and investors were looking for a premium above government bond yield. So they were a diversifier and mainly a source of income and inflation linkage. However, as the opportunity set of real assets has expanded, particularly on the digital infrastructure side, and as interest rates have now come up, and so investors have higher return targets, we see that the role of real assets has, to some extent, broadened from a diversifier and fixed income replacement to also a return enhancer. And as explained a few times, digital infrastructure positions itself at the intersection of both strategies. Just to give you a couple of figures, 5-7 years ago, digital infrastructure was mainly telecom towers in REITs, so mature assets that would provide a long stream of predictable income. Today, the situation has changed meaningfully. Digital infrastructure has moved from about 5% of transaction volumes to over 30% of transaction volumes every quarter, and the majority of it is today data centers, with a range of potential investment opportunities that go from, hyperscale, large data centers to smaller colocation data centers that are faster. Just to give you an idea of the growth that we're expecting, in 2023, globally, we had about 55 gigawatts of data center capacity. Today, we're at around 70 gigawatts of data center capacity globally. By 2030, we could be at around 200 gigawatts of data center capacity. So this gives you a sense of the growth that is expected in the sector and the opportunity for investor to really leverage these strategies to create attractive returns that to some extent can compete even with private equity when we're looking at infrastructure. One word, however, about real estate versus infrastructure, just a snapshot. Traditionally, the differentiation is whenever a real estate investor acquires a data center, they tend to focus on the shell and then get a stream of income through the leases. Whenever an infrastructure investor approaches a data center, they do also focus on the growth. They may have platform strategies where they aggregate different data centers. In other words, they focus on the operator and the growth of the operator. This is a very important distinction because what has happened recently is, particularly for hyperscale data centers, so large cap data centers in North America, real estate capital coming in has really put pressure on prices that have come up and entry returns. So the vast majority of the opportunity at the moment is potentially more in Europe, and particularly in what we call the edge data centers, in markets that are not the FLAP region. So Frankfurt, London, Amsterdam, Paris. That's where we see a lot of growth.
Very interesting. A lot of very interesting data. My next question actually is when we talk about these investments, it's usually big investments, right? Because I mean, when we put about the infrastructure, you are talking about a different segmentation, of course, segmentation of the data center sector overall. So from the hyper, for the middle, the smaller one, but it's everything for a big player. When I say big player, big GPs, or we can talk also about retail, let's say not retail, really mom and dad money, but family offices, wealth managers, the smaller side of it. And then I would like to hear also the opinion of Ivan in this one, because of course SubgenAI is very active in that.
Yeah, look, Antonio, first of all, one important point. The average transaction size for private infrastructure has moved from $500 million transaction sizes in dollars to about 300 million. Why? Because the small cap part of the market, the mid-market, is booming with new opportunities, growth opportunities. Investors have different ways to access these opportunities. It can be funds or it can be direct investments. Funds, enable small ticket sizes, can be sometimes 5, 10 million. So they're really palatable for high net worth or family offices. And investors can, as you said, target 3 different types of market. The small cap, where you have funds typically below 750 million, the mid cap, where you have funds that are below 5 billion, let's say more or less, and then the large cap, that is anything above. These different funds or GPs tend to have different strategies, with the mid and small cap focusing more on the colocation space when it comes to data centers. But look, that's not all. Investors can access digital infrastructure also to listed vehicles that invest in private infrastructure. You have many examples, especially in the UK, similar to REITs. And then where we see a lot of evolution also for mom and dad, as you said, is now in LTAFs. So ETFs effectively, where the regulator enables managers to actually invest in private assets with a liquidity buffer. Now, a little bit early days, we see that they are expanding mainly on the private debt side. So there can be an opportunity to invest in digital infrastructure to private debt in these vehicles. But I'm sure that within the next 3 to 5 years, we'll see this market continuing to grow. So it doesn't need to be a large investment, as you say. It can be small tickets, and actually these small tickets provide you with a range of options, strategic options, that can be really tailored to your investment strategy.
Definitely, very much appreciate that. And actually, this is actually where we are spotting even SubgenAI, because we are seeing, for us as a family office, as you know, the sweet spot actually is like the smaller middle size instead of bigger size, because there are so many different risk mitigation that we can mitigate. And then we like to have a much more active approach. So this is also your angle, Ivan. This is what you are experiencing also in Spain and in the Nordic side, where actually you are much more working, right?
Yes, we have like different 3 locations we are working in. From the investor side, it's quite interesting because we can speak with many investors, and it's like this different classification that Gianluca is doing. Of course, he's the expert on investing, so that's why we should have in mind his opinion, not mine. But it's totally true. We are experiencing exactly that, and I think that middle range is the one that is perfect for us. We are talking to some investors. And as for the thing that we want to create, that has also to do with this idea of infrastructure that he was explaining, when we believe that it should be for us and for the next maybe 10 years, AI specialized infrastructure that's going to change the model. Also cramming hardware into data centers just to have a high density and energy efficient setups. So that's going to be part of the future on this real asset that Atam is touching on, this intelligence infrastructure for the future that is going to come, that is agentic AI, multi-agent systems, and these kind of things. No, so it's exactly that region, the one that we are trying to fulfill. Yeah.
That's absolutely interesting, because yesterday I was at the UBS conference with a specific focus on AI, and actually they are experiencing the same insights that either Gianluca passed to us today of this shift, specifically on this segment of innovative infrastructure linked to AI for the smaller investment side to the middle sides, and put it either the public and the private investor all together to develop those kind of strategy. Now, what I would like to hear, there's been an evolution of data centers, no? As either Gianluca, either even just mentioned, have been following the evolution of AI, no? The artificial intelligence that is mainly the driver. Why are you building up this data center? Because of this huge activity in artificial intelligence. So now, Ivan, I would like to ask you, from building up the cloud to the training models for the LLM, there are different categories when you talk about artificial intelligence evolution. Can you explain much more where SubgenAI is involved with so far, where you guys are focusing on?
Yeah, we try to cover the end-to-end solution, because what we believe is that adoption in AI is something that is still to come. It's not, if we see the intelligence infrastructure now, it's the key topic. So that's why the investors are investing in this area. But if you cannot go backwards in the line, so now the intelligence infrastructure is in the plateau, let's say, or it's going to enter the plateau short enough, but the agents, the agentic AI, the multi-agents structure for the company to manage, like, let's say, imagine like 20 to 30 agents that are fulfilling different tasks. So there's a real integration of AI into the companies. It needs time for that to happen, So what we believe is that we need to offer the end-to-end solution. So that's why we are building facilities, what we call AI factories, that are what I was explaining before. That the importance is in the high density facilities for AI computation. This is one thing. Sovereign in AI. Also, we diverted our strategy from what we thought it was intelligent back then, that was United States, to Europe, in order to fulfill precisely what Gianluca was saying at the beginning. This idea that we in Europe, we need to have infrastructure for this kind of AI computation. So we want to offer that sovereignty as well for the companies, and we are not just doing collocation for that matter, but also GPU as a service, orchestration, enterprise support. This capacity of for the companies to, from the one end, that is, I want to create a multi-agent systems, and to the other end, that is the necessity of computation only for those purposes, that is AI particularly. So in that case, we are building like in three different locations. So we are building from 5 megawatts to a total of 50 megawatts, divided in 3 locations, 20, 20, and 10. And they're going to be interconnected data centers to offer also some regional capacity for those areas in particular, apart from the rest of the Europe. So we want to fulfill that regionality, because we believe that that's going to be the next step as well. Now everything is open, but as the companies evolve and they need computation capacity and they need AI solutions, so they want to have it close to them. So we just have 3 corners of Spain trying to fulfill this map, but also part of it we will offer to the rest of Europe. For us, Europe is is what Gianluca was saying. No, we need to focus on Europe as the main effort. Of our efforts. No, so yeah, that's more or less the idea.
And Antonio, if I may, what
please.
Ivan is saying is extremely relevant and important, and it comes down to a key point. For many years, we have heard that the hyperscaler large cap space for data centers was where purpose-built facilities were built, and the colocation was a little bit the second-class space where companies that would not use the public cloud, that would need more of a standardized service would go. He's saying that it's actually the opposite which is happening, and I agree. What AI is doing, it is effectively shifting this paradigm to smaller companies being able to leverage AI for specific service, meaning that they need purpose-built facilities and services to provide their end-to-end services, which is a very attractive and interesting market, in my view, and one where there is a lot of value potentially.
Indeed. One comment actually on this specific theme that we spoke today, that is this spreading around between US, Europe. Usually, no, and with Gianluca, we've been talking a lot about like the strong US hub, no, for innovation, and it looks to me that continue to be. But also, Europe looks like as a second important hub for the developments of all the value chain behind AI. Gianluca, also, we spoke about it in our recent 20 minutes coffee that we, me and you. Are you seeing concretely also a shift from the investor side, from what is happening and creating a lot of volatility on the US market? So you confirm this shift from US to Europe so far?
Antonio, yes, in conjunction with recent policy shifts in the US, investors have increasingly become worried about the predictability of the market. So we have seen actually a comeback of Europe after a few years of sort of like North America being more attractive than Europe. North America remains still a very, very important market, but we're really touching this shift in preference with our hand. There is also bottom-up reasons for that when it comes to data centers. Even mentioned another very important point, data sovereignty, for example. We have just seen last week a data center transaction in Europe, in France actually, focused on the theme on data sovereignty. So a new investment made to cater for French companies that want their data to stay in France. And we'll see more and more of that. So what you are seeing is effectively a decentralization of the data center market. Europe is extremely important. And within Europe, I think peripheral Europe is becoming increasingly important, also because of the low latency that will be required for many applications.
Yeah.
Indeed, I think still there are a lot of, we've been talking about it, a lot of risks behind. The opportunity is huge, but the risk, no, our job as advisors, you know, we have to see also the two parts of the coins. The risk size, I think in Europe, we spoke about it, is still policy, no, the regulatory side, no, is still there. But another big risks, and here, when you have risk and you experience them, you should learn from them. Actually, happen in your region, Ivan, right? In May, yeah. Spain and Portugal have been experiencing a blackout for electricity. Why I'm telling you this one? Because we know very well that the usage of electricity from data center will be pretty strong, and not only data center, but also the usage of AI and so on. It's very strong. But again, here we want to see like the opportunity side of it, and what that means with that. What you guys have been learning from them. I would like to hear Ivan from the industry side, and also, of course, Gianluca from the GP side.
Well, we believe that resilience must be built in, no? Because for us, downtime equals risk. So that's, I mean, for this business in particular, no, it's so clear. So we are trying to cover this by using different. I mean, we don't expect that to happen quite often. That was kind of a thing that was very, very strange. But anyways, taking that into account, we have this idea of dual power feeds as part of the buildings, on-site storage. Of course, that's way important while building this storage capacity, just to have at least more than 48 hours. I mean, it depends on the storage module, but we have covered big time in order to have security, even if there's like an outage, as it happened last time in Spain. Also regional distribution as well. So there are like few things that you can do in order to cover those risks, to hedge those risks, but that's not a thing. The way we see it is that as businessmen, we need to face some risks and try to hedge them as much as we can, and but we still need to go out for the challenge. So these kind of things, the way I see it, is not, we don't expect that to happen quite often. So we need to just be like rational in order to build these kind of facilities, hedging as much as we can, of course, and these three long-term PPAs as well. So these kind of things can help to hedge these kind of downtimes, but the risk is going to be still there, and it's going to be everywhere. Actually, that happened in Spain. It doesn't mean that it's not going to happen in Sweden next time. So we don't know that.
Indeed. Gianluca, what is the learning from that?
Look, first of all, a comment. No infrastructure is risk-free. Exactly as Ivan is saying, it's always a matter of identifying risks, mitigating them, or structuring financially around them. And I think we see a lot of innovation when it comes to data center transactions in the space, or operating data centers, with a lot of innovation when it comes to power procurement and some of the things Ivan managed. But look, one very short point on my side. Energy grids management is becoming an increasingly critical part of the energy system. Why? On the supply side, you have more renewables, which are more decentralized and increase the complexity and reduce the predictability of production of electricity. And on the demand side, we have things like data centers, which are boosting demand. We have actually seen recently that in the Netherlands, electricity access was rationalized. I don't know if you saw it. So to ease access to the grid, which is very bottlenecked in a market which has very high electricity prices. We may continue to see, as you said, some regulatory intervention in whatever shape or form, but more than anything, to try and make sure that grids are capable of keeping the pace with this innovation, and making sure that there is enough investment to support this. But again, at transaction level, there are ways today to mitigate and structure this risk with renewables, battery storage, and again, the use of more efficiency, for example, cooling technologies within data centers to increase their efficiency, etc. Ivan is much more experienced than in all of these technologies.
Indeed. Unfortunately, I have to tell you, we are very out of time. It's been passed by far, like our 20 minutes, but it was absolutely delightful and full of insight. I really would like once again to thank Ivan for your time, for your insights. Gianluca, thank you once again very much for your precious time. And we're going to see you on the next one already. Have a good rest of the weekend for you both.
Thank you.
Thank you. It's been a pleasure.
Thank you. Bye.
Likewise.
Bye.
Bye, guys. Bye.